Yeah, it's a really good point.
Yeah, it's great. Not to toot our horns at all, but we've all been very successful this year. 2021's been an excellent year. And definitely a good segue to that is that we think that things are about to get even sweeter. And I think that's a great segment towards Tom Lee's article.
Tom Lee. Do you want to explain who Tom is to those who don't know him?
Yeah, so Tom Lee is one of our favorite market strategists from Fundstrat. So he updated his S&P 500 target to 4,600 by year end. And right now we're at 4,350. So I think that implies what's the gain for the year on that? Like
8%. Oh, for the year? I don't know.
But if you pop that on what we already have and then compound that, I think it's like over 25% gain for stocks this year. I definitely think that it can happen. If we start to get breakouts from large cap tech, like if Amazon breaks above 3550, Apple breaks above 145, 4600 is going to happen. It's in the cards.
I think we will, man. I have a bunch of Apple and Amazon, and I love the charts. Like they're just breaking out. They're looking super strong, and like that's the nice thing about these big caps is, you know, you get that stair stepping pattern, right? Like they go up, they consolidate for a while, and then, you know, even like a year and a half, and then as soon as they break out, you just get this big straight push way higher until you get the next consolidation level. And from looking at the charts completely alone, I mean, we're just at the top end of those consolidations now. So
Amazon is about to break out imminently. Yeah, like me and you have talked about this, David and I, we've all talked about it together. Amazon's going to break out imminently. I think Apple's like almost there. Yeah. But I think that's Apple right there. I saw on my chart, yeah, our charts aren't the same for some reason because I got resistance at 145 and it's at 139.
Yeah, just David, if you go to the 1 day chart, like Apple just broke over its previous high, like the most recent one, and it closed nice.
Big wick, right?
Yeah, there you go. So we broke out over that level, which is really nice. Now we just got to see how it reacts to the very top up there.
Like Amazon is my best idea right now, like especially for short term. Like I think that Nvidia is still the no-brainer. You just overweight that. But going back to sort of what Tom Lee said, I think that we're in a scenario where we're going to see a lot more revisions in target prices because I think it's a psychological thing. I think that as the S&P moves higher and earnings continue to beat, these analysts are going to have to raise their targets because they're not going to look smart when the S&P 500 closes at 4,500 at year end and their target price is like under 4,000. Like who's going to buy their research for the next year if they've been wrong on their calls? So I think that we're in a situation where analysts are going to have to start chasing targets, which may end up making the market go up even more. So I think we're in a really good situation if you own stocks. And I think that things are about to get even better. You haven't seen anything yet.
So I got a question for you, Brendan, just because you have a little bit more information on this than we do. So like when analysts and stuff are looking at charts, you know, because like when I look at a chart, say like, you know, I'm in Amazon right now, we were just talking about because it looks super bullish, like I'm expecting a big move up. Like I have an idea in my head how far it's going to go just because of the chart. But like what sort of weight do you put on that as far as like the actual like market cap of the company? Like, you know, if you're looking at a chart, say like Amazon, let's just say you're thinking, okay, it's going to go, you know, straight up to $4,000 because that's the way the chart looks. But are like a lot of these analysts, are they weighing in like, well, no, it's not going to go that high because then the market cap would be way too big for what it's worth. Like how much is that?
Oh, no, they're not looking at market caps. I think they're looking at like multiples, like revenue models and cash flow. And again, I'm not as much of a fundamental guy. I'm a fundamental guy from what I get from my dad and my older brothers. So right. I just sort of take from them and I learned a lot from them. I'm a technical analyst at the end of the day, but I know that these investment firms or these investment banks, I should say, that are providing research, yeah, they'll use a lot of like fundamental metrics and multiples. And I think they're usually pretty conservative with their estimates because they want to provide an estimate that is achievable, but they don't want to make it too high because I feel like they don't want to look stupid on the high end or the low end. So I think they like to give something conservative. In my opinion, I think they're sandbagging it. Like, I don't know the exact number, but I think like the street high on Amazon's like 4,500 or like 5,000. And I'll tell you, Amazon's eventually going to like $10,000 a share. It's just going to happen. You hold these things long enough, and they're innovating. They're growing their revenue 30% a year. They're extremely profitable. I think Amazon's like 40 times next year's earnings, which is like extremely reasonable considering they're growing earnings 30%. So, to answer your question, I don't think they look at market cap. They probably just look at more so fundamental metrics.
Okay. Yeah, I was just kind of curious of that because I know like when I look at stuff, like I look at the company and as a, a solid company, like when you talk about Amazon or something like that. But it's funny you say 4,500 because that's kind of that's the number that I had in my head as well. Like if we get through this breakout, I can see it making a pretty quick move to 4,500. Like that was sort of around where my target was.
But you have
Sam,
to
do
keep
you
in
mind putting
mind.
this chart up?
Yeah. I just want to add one thing though. Okay, you have that. Perfect.
So I just wanted to say to your point that analysts are playing it safe. The average price target is 43, which is exactly what Amazon is right now, so they can't be wrong.
wait, is this Canadian? Because Amazon's 30.
Yeah, 30 something, 35, somewhere like that.
35.
This is American. So like the highest target is 5,500. The average is 43. Lowest is 37.75. This is out of 31 analysts. All 31
yeah,
are high.
See, I don't even look at the price targets. Like I'm just going based off technicals, and I had 4,500 in my head.
Yeah, so me and you discussed this earlier, Kaylin. I think we all discussed this. That if you, I think we did it on a couple episodes ago. That like if you measure the last breakout, what we had the last breakout, and you add it on top of the consolidation that we just had, that's like I think $4,600. So it's perfect.
Yeah.
It lines up with exactly because in technical analysis we do a lot of that. You know what, David? I think I mix the two up: Amazon and Nvidia. Pop up Nvidia. I think the street high on Nvidia is $1,000, and I think it's BMO. And I still think that is crazy because this thing's going to $1 trillion market cap in my opinion.
Sorry,
Exactly.
what was the numbers? Yeah.
$1,000. There's one guy. It's BMO. They just raised it. So Nvidia is currently what 820, 840. I forget the price. It's going up too much right now.
Ready?
819.
Okay, so it's 819, and the average price is 762.
Yeah.
So this is what's going to add fuel to the fire. All these analysts, they're sweating right now because they said Nvidia was only going to go to $600, $700, and it's already higher than that. And this is the target for year end. So all of these analysts are going to be forced to raise it, and every time they raise it, it's going to cause more people to buy. So it's like they're literally just adding fuel to the fire, which is going to make this thing go even higher. And more people raise their estimates. The company continues to beat on earnings. It's just like a cycle. So It's a really good situation to be in when you have analysts raising, but they haven't done it yet.
Right.
I actually saw I actually saw that happen with Tesla. Their Q2 deliveries, they came out at 201,000 units. And just less than 10 days ago, every analyst was like about 80. They're estimating they're going to have like 185, 190,000, the most bullish. Then, like 2 days before the numbers came out, they all quickly upgraded it to like 207, 206, whatever. So, and then the headlines, of course, the Tesla missed estimates. It's like, well, first of all, you revised those estimates two days before it came out, and before that, you were all like bears, and then now you revised it just so you can write the headline that they missed estimates. I'm like, I think I've said this before. I'm like, estimates don't miss deliveries. Deliveries don't miss estimates. Estimates miss deliveries. Deliveries are going to happen. You know what I mean? Like the performance is the performance. Your guess is what's wrong.
Mm-hmm.
So like, how are you saying that, the reality didn't miss your guess? Like, it's ridiculous.
Yeah, that's a good way to look at it. I like that.